Wall Street is shaking. Tariffs are back. Bank earnings just dropped a warning sign, and Jerome Powell, he's running out of options. In today's video, I'm breaking down how these are colliding, what it means for interest rates, your money, and the next move in the fragile stock market. Let's start with the latest tariff headlines. As we all know, CPI inflation just dropped. And if you've been living under a rock, we did call that energy was going to come in at a negative number, not as pretty as it was before. And we'll dive into the nuance of this in just a moment. However, for those that were paying attention, the CPI came in at 2.7 versus 2.6 expected and previously 2.4. However, core, with a significant plot twist, only ticked up about 0.1 to 2.9, previously 2.8, and was 3%. So what does this mean for the broader economy? The US just reintroduced a new tariffs on basically China, a bunch of countries, Japan, the EU, and everything. And this was in response to all the deals that were going on. Tariffs are basically taxes on imports. Consumers eat that cost, or do they, right? We're going to be talking about that. And what the Fed's biggest fear right now is reigniting inflation, right? The transitory narrative coming to hunt us in the back. And that puts Powell in a box. He can't necessarily cut rates, even though the administration is pressuring him to cut rates. And he really cannot do much to raise rates or control the bond market, right? The bond market responded with one thing, and that was simply going up. The bond market headed the 10-year, so mortgages are more expensive, leading to higher payments for everyone that wants to buy a house. The 30-year as well, crossing above 5, which is what the main U.S. debt holdings is. Even though the Treasury said that they were only going to renew rates at a 1 year or sub 1 year, they're still paying 4.12%, which is essentially the same equivalent of them paying the 10-year or the 20-year for the next foreseeable future. And until inflation calms down, the bond market is not going to like it in any way, shape, or form. So here's the setup. The Fed wants inflation at 2%. Core inflation is sticky. As we have all said on this channel multiple times, core inflation is sticky. And tariffs, that's a recipe for upside CPI surprises, as we saw today. Now, was this a fluke? Is this going to result in more inflation coming to a town near you? Or is this going to be a little blip in the bucket, right? We can dive into this report right here. So for all those that don't want to read the long report, here's the too long didn't read version for this. And Powell already hinted at he's not cutting rates, right? He already gave us the scoop of like, you're not getting rate cuts. The Fed Watch tool also went from 95% to 97%. So it absolutely didn't matter. The narrative was already preset. And this is going to be the biggest buying opportunity for you guys. Notice how I said buying there, not necessarily selling like everyone is talking about. But if we look at this, energy came in basically at a 0.9 month-over-month increase. That's not even significant, right? Majorly driven as a negative number. Food was a bigger driver, but I want to bring your attention to something more. Services, less energy services, and shelter. Both of these running about 3.8, 4.2. This is really, really important because this is the tricky one that Powell has been saying has been leading to further upside. Main thing that drove inflation higher this time is also because oil prices didn't necessarily go down and everyone was price gouging. So is it really tariffs doing it, or is it just people being greedy bunches of you know what, and thus not allowing the consumer that's already tight? And we're going to talk about bank earnings as well, which is really interesting how bank earnings tied into the inflation. Now you ask yourself, is inflation ticking up again? How do we justify a cut heading into the election season next year as the political dynamics shifts? Well, it's pretty darn simple because this is not caused from inflation, and the banks were the canary in the coal mine for it. Why do I say that? Well, simply put, JP Morgan actually beat earnings but fell down in stock price. And we can see a similar bout with a bunch of the other banks. And simply put, that makes it a really good buying opportunity for you guys. As we can see here, JP Morgan was running like crazy heading into earnings. So what did you expect? Okay, you didn't get the rosiest picture in the world, but you could have been worse off like a Wells Fargo that actually fell significantly, but still coming down that 50-day moving average. So that's going to be an interesting one to watch. Bank of America is reporting today, so that'll be out as well. Citi actually went up. So it's not all doom and gloom in the banking sector. A lot of these banks gave very bullish reports. We can also see Wells Fargo that even fell had basically a green report across the board. Beat revenue, beat EPS, beat everything. However, the main driver was that these banks going down is the loan volumes, right? Their loan volumes were not keeping up. We're seeing shrinking and shrinking loan volumes. JP Morgan beat on revenue, but loan growth slowed. Bank of America flagged higher default risk. Goldman Sachs showed weakness in M&A. Translation, consumers are getting tighter. Businesses are hesitant to basically take on risk, and banks are starting to price in credit risk again because this environment of prolonged quantitative tightening is leaving them getting nervous, and the market is following in their step. The market is getting more and more nervous about where we could be going. And simply put, with the Federal Reserve expectations like this, we are not going to get a rate cut, maybe even to September, right? September right now is dead odds, right? This could flip with a single thing. We also have the SEP coming up in July 30th, which is only 15 days away. In 15 days, we will have Jerome Powell coming out. Taylor is data dependent and probably get a lot of fun questions. So that's going to be a fun one. Make sure you guys are subscribed to the channel for when that comes out. Also, the big diamond in the rough that we've been talking about till no extent, and I need to talk about it, but I'm not going to make the whole video about it, is my baby called NVIDIA. NVIDIA hit $170, new all-time high, blue sky breakout. If you didn't own it at 85, you didn't own it at 114, what are you waiting for? This thing is going to hit 5 trillion in a dang heartbeat, and earnings is only the end of August. So this is going to be a really fun one with NVIDIA because that earnings that comes out on August 27 is going to be an amazing birthday present for me because I think it's probably going to hit 5 trillion on that earnings. But if you guys want to know more about video, check out the latest video that we did. Make sure you subscribe to the channel and hit the like button down below. But more about all the funness. What will Powell actually do in the preceding meeting? Again, this is where it really gets so. Most recent comments, Powell hesitated and reiterated that the Fed sees disinflation. They need greater confidence before cutting, aka we're not cutting until something breaks, right? That's the narrative we've seen with Powell. We've seen the bout that goes back between the various administration and the Federal Reserve, and how Scott Bessent has even said, hey, we need to cut rates right now. The S&P didn't necessarily like this. Again, that was driven by mainly the banks being a large proportion of S&P, whereas the tech-heavy sector NASDAQ didn't fall as much. This resulted in a weekly breakout, but this is where the candle needs to continue, right? We're having stalled momentum sideways, so maybe we're just taking a break right now, and we're heading higher. And also, ultimately, there's no winners in this scenario besides you guys because you're going to get prices lower, right? We've had a massive push on the latest inflation number, not inflation number, but the fear and greed index, and that has bolstered a lot of greed in the markets. Now, as Warren Buffett says, when others are greedy, be fearful. When others are fearful, be greedy. We actually came out of extreme greed. So if we get a pullback to, let's say, 70, 65, that'll be an excellent buying opportunity. Maybe you get to scoop up some stocks before earnings, right? Meta, Microsoft, Netflix coming up on earnings, and those would definitely be ones to keep an eye on, especially Netflix that has come down to that 50-day moving average is definitely a buy in my opinion right now because the 50-day is going to find support. Netflix expected to report really good earnings. That's almost a day away. We're going to be streaming that one live, so make sure you guys are subscribed to the channel for that. And again, Powell is kind of getting disarmed with everything. So really it's where are the opportunities? The NASDAQ, again, had a breakout actually closing very closely to the weekly breakout. So there's only Netflix could easily push the market up by itself. NVIDIA was strapping the whole market on its back today with the latest news of H20 chips going to market in China, resulting in a massive $150 billion going into NVIDIA alone. AMD, AVGO all bolstered. The whole AI industry was leading today. And names like Palantir were kind of lagging a little bit, but as they broke to new all-time highs. So again, there's plenty of buying opportunities out there. If you're not looking to get all the banks, Berkshire Hathaway has just been getting slaughtered recently as it's heading down below its crazy evaluation. This could be an amazing discount as their earnings is heading up in August forward. I do own them. Again, I bought them at around $484, losing a little bit right now, but I still think it's one of those bigger bank companies, JP Morgan, Burke, probably can't go wrong with either. That's what I'd be looking. I did a video on what 4 companies I would love to see, so make sure you guys check that one out. If I could only buy 4 companies for the rest of my life, what those would be, that'll be linked in the description below. So where do we go from here? Well, simply put, it's time to buy. And really, it's time to buy anything that goes red, because Powell can talk all he wants about everything. Inflation can go wherever it wants, but I look at two things, actually three things. And this one I'm just going to root. What did the VIX do today? Well, the VIX really hasn't done much. It's been making lower lows as we've been going downwards. The 50-day has crossed over the 200, meaning we're back into calm, cool, collected market territory. As we've seen, the bouts of sells is not necessarily as bad as the bouts of buys, right? Also, fresh reminder for all of you guys, the net speculative positions are still shorting the market by nearly a crazy number of 140,000 positions. This is bear fuel. All it's going to take is one single match to light that kerosene fire. Again, the banks fell. Wells Fargo fell. Awesome buying opportunity. Citi went up. Congratulations for those that own Citi. And JP Morgan had a pullback. Everyone was asking for it, but yet everyone is slapping the guest for it in the face and basically saying, hey, no, thank you. The same way they did NVIDIA, right? We talked, I'm going to beat NVIDIA over the head until this gets through everyone's skull. At $123 and $140, everyone was saying was overvalued. It's 170 now, heading to 200 in a heartbeat, and they still won't get in it. Stop looking for the pullback. Just enjoy the market as it is. As the most risk-on asset just broke to 120, which is Bitcoin. Again, this is just leading. Tariffs are not here, guys, right? You have the banks basically saying that the consumer is strapped for cash, but magically they're paying more prices. Like, that just doesn't make sense in any way, shape, or form. And that's why I made the video of the top 4 companies I'll be buying, linked in the top left over here, along with the Discord channel. If you guys like this, make sure you guys subscribe to the channel so you get more amazing content like this, where we share our thoughts, portfolios with you live on YouTube, rather than putting it behind a paywall. All we ask is for you guys to subscribe, hit the bell notification, and throw a like down below. Thank you all so much for watching. I'll see you in the next one.